All right, it's the 28th of July. It's a Monday, and we got just under 30 minutes to the NY Open. Just give me a second. Okay. Let's take a look at the calendar. Busy week. All right. So we've got the interest rate decision. Then we've got FOMC meeting minutes, 30 minutes after that. Then we've got NFP this week, right? So this is NFP week. We should have decent volume. Going by last week, we should have good volume this week, right? Last week there was no news. And if you look at the weekly candle, we still did about, how many pips did we do on the weekly candle? Yeah, we did over 1,100 pips, about 1,150 pips. So that's decent volume for a non-news week. Now, let's talk about this week before we look at the charts. Fundamentally, Europe is kind of agreeing to some terms with regard to the tariffs. I think that happened yesterday in Scotland. So that is favored for the US dollar, and there is less uncertainty in the market than before. Therefore, gold prices should continue to go down because the dollar is also a safe haven currency, and investment should move to the US dollar, right? So we should see price heading down. Now, could we have temporary pullbacks during the week? Of course we can, right? Price can always pull back, before it continues down. Now, we've been pushing down. Now, let's go to the weekly time frame. We have a heavy rejection from 3430 last week, right? Probably in anticipation of favorable news towards the tariffs from Europe. It could be that. So last week we had a clear and heavy rejection from 3430 and 3400. Price is pushing down, closed just above 3332. We did the weekly candle prediction, and this was one of the predictions where there would be a clear rejection and price would possibly close above 3332. You can go back onto Friday's stream and listen to the first 5 or 7 minutes of the stream, and we did the weekly candle prediction. Price did continue down for the day in the daily time frame, and then started to push back up in the second half of the NY session. I think we'll go back and look at that later. Right. So on the weekly time frame, we're pushing down. It's a heavy rejection from 3430 and 3400. The last time it happened was here and also here, clear rejection, and then price continued to push down. Clear rejection and price continued to push down, right? So that could happen. We could have a clear rejection, price could continue to push down towards to this area, right? This area. So around, possibly coming down to 2320, right? That's quite a bit away from current price. About 1,000 pips could happen in a week. Could definitely happen this week, because this week has high volatile news events. We could have the weekly candle could do 1,500 pips easy this week, right? If you look at these candles, that's over 2,300 pips. This one here, about nearly 2,000 pips. So we can easily have 1,500 pip candle this week, right? Easy. But for that to happen, price will need liquidity. It could push up, grab liquidity, and then continue down. Now, how far is it going to push up? On this time frame, we can't say. We'll have to look at the 4-hour time frame. Just look at our zones. How far could price pull back to, right? And depending on that, we will look for trades on the lower time frame, on the 30-minute time frame. All right. So let's look at the daily. We are deep inside this green zone. We haven't broken it yet, but the fact that, and I've said this many times on the streams, right? If price comes to a decision level, right, on the high time frame, and when I say high time frame decision level, yeah, when I say high time frame decision level, it's on the weekly and daily time frame, always on the weekly and the daily, right? So a high time frame decision level is a zone that has taken out an opposing zone. So this zone here has taken out this supply, this drop, base, drop, right? This demand zone has pushed up and gone above those. This is a decision level. Now, when price gets to a decision level, one of two things is going to happen. Price is going to grab liquidity in that level and reverse and go in the opposite direction. Or if price starts to range in that area, right, for let's say 4 hours, anything beyond 4 hours, 4 hours, 6 hours, 8 hours, you start seeing 4 hour candles close inside the range, then it's very likely that zone is going to break and price is going to continue in that same direction, right? So in this case, we are in a demand zone. If we look at the 4 hour time frame and we see that price is ranging at the liquidity levels, we'll have to go to the trading chart to find the lower time frame liquidity levels. If we see price ranging at those liquidity levels, right, without reversing, right, and what you want to see is, let's say for example, if you have a 30-minute, if you have a 4 hour zone, and inside that you have a, let's say, a 1 hour liquidity candle or a 15-minute or 30-minute liquidity candle, you want to see price touch that, create 30-minute support, and start creating high highs and high lows, right? That's a reversal. That is signs on the 30-minute time frame that price is reversing from that zone. If you don't see that, and if you see price ranging, price touches the liquidity candle, starts to range, starts to create range for 3 hours, 4 hours and more, that means price is ranging in that zone and it's very likely going to break through that and and continue to head down, right? We will have a look at the low time frame later. All right, so if we do break this and head down, where could we come to? First, obviously, to 3,300. That is this daily support here, around 3,300. And then further down to these wicks here, which is at 3,289, right? So probably another over about 110 pips further down from there, right? So today we've done about 250 pips. We've got quite a bit of move left. I think we're averaging about 500 pips a day. So we have a bit of the move left. So could that move be a pullback today to these levels to continue down later for the week, or are we going to start pushing down starting today? Are we going to start pushing down already, and are we going to continue for the rest of the week, or are we going to pull back? We've already pulled back quite a bit from here. We've pushed up about 240 pips, 245 pips. So are we going to continue higher, grab more liquidity, and then come down is the question, right? Let's go to the 30-minute time frame. Let's go to a trading chart basically. And was there a trade on Friday? Yes, there was. There was no pullback to take it. I don't hold trades, overnight. Maybe I should start doing that. But there was this candle tapped the liquidity candle, as you can see. Let me just change the template here. Okay. So this was the how we had it drawn. This was the liquidity candle on Friday. This one tapped. This one broke the low. This is how I think drew the fib. I drew the fib on Friday. Price did not come there during the session. We pushed down. But then today in the Asian session, in the London session, we've tapped the optimal and sniper level perfectly, and prices pushed down already 116 pips, right? So the levels work really well. Maybe I should start holding pending orders over the week. I don't know. Let's see. So yeah, so your stop loss would be just above that candle high, because you can have a safer stop loss above the liquidity candle high, which is here, or a more aggressive stop loss above the swing high, which is this high right here. This is a 30-minute swing high right here, right? And yeah, stop loss on this is about what, 30 pips, 35, 34, 30, 33, 34 pips, and here it's about 65 65 pips, let's say 65, 68 pips. And we've dropped from here 116, and from here also about 70, about 80 pips. And we should be continuing down now. Let's see. All right. So let's get rid of all of these and start our zones for today. If you have any questions on anything that I discuss, anything that I explain here, anything to do with what we discuss here on the charts, you can always post it in the chat. All right. So just a second. Okay, let's start with supply. We have a drop, a base, and a drop here. Let's move this across. Move this also. Okay. Let's take a look at this time here on the 1-hour time frame, because we've crossed this psychological round number, and whenever price crosses a psychological round number or weekly SR level, I always look at the lower time frame to find a zone. On the 1-hour, this one looks better here. Let's take 30-minute as well. Yeah, I would keep it like this, or draw it like this. Yeah, of the 30-minute time frame. Draw it off the 30-minute time frame. So this high would be 928, and this open would be 981. 928, 981. Okay. It has not done anything today. We've not moved much. We've moved about 240 pips today. That's it. So that's why price is just ranging here. You can see how we just spoke about this 5 minutes back. We spoke about when price is approaching a zone. Now it hasn't approached, we've tapped the liquidity candle, but we're not in it yet. We are above it and we're ranging. So it still doesn't mean that price is going to go through. It doesn't mean that price can, because the ranging, what you need to look for if price is ranging is inside the zone, inside the liquidity candle, is it ranging? If it does, then it's going to go down. Right now, we're ranging just above it. It's 1, 2, 3, 4, 5, 6. Yeah, for 24 hours, about 26 hours, for 26, 27 hours, we've been ranging, just going sideways, right? That's the top of the range, and that is the bottom of the range. On the 30-minute time frame, the top and the bottom will be clearer. We can mark that later. All right, so I'm going to extend this to the right. Okay. So we have a readjusted 4-hour supply zone here, and this is an old demand zone. That's it. That's the only new zone is here. Everything else is from last week. So I'm going to extend all of these to the right. As I said, nothing's happened. We've been ranging for the last 26 hours. Okay, so we've covered about 420 pips to the downside. Yeah, it should be good. Should be good. We don't need any more than that. It's a Monday. There is no news today. All right. Let's delete this one. Right. So this is the new zone here. A readjusted zone. We had kind of drawn it on Friday based off a 30-minute time frame because there was no 4-hour candle, there was no 4-hour base yet, but now we do have a 4-hour base. So let's take a look at this area and see if this has taken out opposing demand to see if it's a high liquidity zone or not. Let's start at the 1-hour time frame. Has this zone taken out anything to the left? Yes, it has. You have this drop base rally here. This move down. These two candles have taken out that low there. So this is a high liquidity zone. Okay. Let's take a look at this area once more. There's nothing here. Price can react here. It can react. We'll watch it. We'll see what happens if we come there. But if it comes there, if it comes to this zone, it's very likely going to come further up to 3367 and then grab liquidity push down. 3367 is here. Yeah, that's very likely where if price is going to come up that far, then it's very likely going to come to 33367 because that's where the wicks are. These wicks are all at 3367. If you're going to come that up far, which is not too much, about 293, about 280, 290 pips away from current price, then it's going to very likely come to 3367, right? So if you break above here, I don't think price is going to stop here. It's going to continue further up and then push down. Right now we're ranging. Okay. All right. Next, let's see if there is a high liquidity candle in here. All right. Let's start at the 1-hour time frame. We're looking for the largest candle. The largest candle, there is this one, but this is outside the zone. The largest one, there is this candle. That's the next one. Let's look left if there is anything left of the zone. Left of this, is there anything left? There is this big candle here. That's very far left, but it is inside that zone. I think it's very far left. I don't look that far left, but we'll just, I want to see where it leads to. 30-minute, 15-minute, 129. Yeah, no, that's too far left. Yeah, this is way too far left. Left here, I don't like cutting through candles. Unless I really have to. Okay, let's start with this one. Thirty-minute, yeah, that's good. 15-minute. Anything on the 5-minute? Nothing. 15 is good. 418560. Okay. It's 84 pips. This is 82. Yeah, there's this big candle here. See where this candle leads to. 034164. Yeah, that's it. It's a old liquidity candle, but that level is significant. It's um, it's on the 1 minute and it's a 180 pip liquidity candle, but price has tapped there. On Friday, a London session today, twice, we're trying to stay below that. Yeah, yeah. We gotta, we gotta keep that candle. The 1 minute time frame. Just take a look at that again. That area is significant. It was news, I think, news driven. I think this was NFP NFP in July, this month. NFP, I think, was it 16th? No, probably CPI. CPI 16th was CPI, I think. Yeah, PPI 16th was PPI. Yeah, there isn't anything smaller. This is the smallest, lowest time frame. 34, 60, 34, 60, 34, 1464. Yeah, I'm gonna keep that. I'm gonna keep that. Yeah, 180 pips. Okay, so here we've tapped the liquidity candle. We are in between this, but yeah, we'll draw support resistance levels later. Okay, next let's go to the 15-minute time frame and see what price has done in the Asian and London sessions. There's nothing happening right now. We're just ranging. Okay, just a second. Okay, so the market opened here and it gapped down. closed here, opened here, 150, around 150, 155 pip gap, and then immediately pushed up to fill the gap. The opened in the liquidity candle, right in the liquidity. So the market opened at 33.2150, all right, and this is a liquidity candle now. Yeah, we got to redraw this area here, because now there's an invisible candle here. We've spoken about this. When the market gaps, there is a gap here. This is where on the, yeah. So let me explain this. For those who've been here, have heard me, I'm just going to probably sounds like I'm repeating myself, but for those who haven't heard it, then it's good for you to know. So this gap, this is where on the 4-hour time frame, this is where the candle closed on Friday, and this is where the next candle opened, right? So that's a 155 pip gap, 150, 155 pip gap, right? That's an invisible bearish candle there, right? So which means if that's a drop, a base, and a drop, and then with that drop, the next candle is a rally. So there is supply there, right? Now you won't be able to see a base there because there isn't one, because it's an invisible candle, right? But we can't ignore that. There's a drop there and our immediate rally. Even though we don't have a base, we have to look at that area. Well, let's go on the 30-minute time frame. Right, this is a push up. Let's look at the 15-minute time frame. If you have anything on the 15-minute, no, there is nothing. But that is a liquidity candle. Let's look at 5-minute. Yeah, this one right here. 160, 102. I can't draw a zone there, but I can draw the liquidity candle. I can't draw the zone because there is no base there. Check, see that candle on the 1-minute as well. 47. What is this? 39. Yeah, that is it. That's a liquidity candle on the 1-minute. 552074. 552074. We'll bring this down now so we don't overlap. 2074. Okay, so there is a liquidity candle there, right? It's still part of that supply zone, but it's created a new liquidity candle to push up. Now, let's go to the 15-minute chart. Continue with our Asian lows and highs. Tapped here. This is 145. No. This is the NY open. Market's just open. London high. It's just range in here today. Double seven. Okay. 769. 239. 534. Yeah, this would have to do. It's ugly. That's why it's too much of noise on the 15-minute time frame. Maybe 30-minute might be. Yeah, swing low, not this one. The swing low to push price above. Yeah, makes sense. Closed above, went deeper, came down. Yeah, this makes sense. 30-minute is better. All right. Anyway, let's take a closer look at what price did. Now on Friday, we came down to the zone, pushed back up, right? We pushed back up. We didn't come back to the liquidity candle because that was the end of the trading day on Friday, and the market closed here, right? We just ranged a bit for probably a couple of hours, and then we closed, right? So if you look at, you'll probably see, yeah, about 3 hours we ranged, 2 hours, 2.5 hours we ranged there, and then the market closed, right? Then the market opened with a gap, 155 pip gap down, tapped this liquidity candle. We've pushed it down now because you don't want to overlap it, but it tapped the liquidity candle and immediately created one more liquidity candle on the 1 minute time frame, which is about 50 pip candle, and pushed up, right? Then price came into that liquidity candle. This is the market open. That's why I'm not considering this as the Asian low. Asian low is around starting from around 2 a.m. IC market server time, and this is before that, right? So this is part of the market open. That is why I'm not considering this low as the Asian low. Price tapped into this, pushed up, came back down immediately. We're just ranging, created the Asian low, formed 30-minute support right there, pushed back up. We've moved around about 100 pips, 110 pips in the Asian, and similar in the London, 120 in the London session or the European session, and about 110 in the Asian session. So nothing much. We're just ranging. We've been ranging this area for the past 26 hours. Now we created the Asian low, closed above 3332 weekly SR level. We closed above the weekly SR level, pushed up to the EMAs, tapped the EMA, created the Asian high, came back down, stayed above 3332, created support there on the 30-minute time frame, right there, created the 30-minute support, pushed back up to the Asian high, closed above it here, this candle, when the next candle went straight into the liquidity candle. All right, tap the liquidity candle. Now you saw me draw this liquidity candle based on the 1 minute time frame, going back as far as the 16th of July. For people of it was created during PPI news. All right, so we came in here, created 30-minute resistance, pushed back to the Asian high. We rejected that, created 30-minute support, pushed back into the liquidity candle and broke this high and went deeper, right? Created the London high and 30-minute resistance, came back here. So we've been ranging between this area for a while, for about 3 hours. 1, 2, 3, yeah, about 4 hours. We ranged here. We tapped the Asian high again, closed below, closed back above, then tapped the liquidity candle again, then closed below, right? And now we've just been ranging in that area, right? Trying to stay below the Asian high, trying to stay below the Asian high. And if it stays below, if it is successful at that, then we're heading down back to the Asian low, and we close below here, we're coming to the London low, right? But now we don't have a rejection of the London high. We're rejecting the Asian high. So I think we could have a pullback here before we come down, if we are coming down. We're below the EMAs right now. We're ranging. It's very hard to say. We're going to look at what we're going to do is draw 30-minute support resistance. Prices ranging for 27 hours, right? This is we've got 20 minutes for the candle to close. I'm going to be drawing support. So whenever price is ranging, right, for a very long period of time and there is no clear direction, you don't have um, a high low or a lower high, forming, or you're confused about it, and if price is just ranging and you don't know what to do, just draw support resistance levels, right, and see which one price is respecting. If it respects one, then it's heading to the next, right? So that's what we're going to do now. Okay, so there's one here. Roughly, that's what it is. Roughly, right? We can I can draw these with more accuracy, but for now, well, we can. It's very clear what price is doing. See this, yeah, this makes sense. So 33.43.50, I would say 33.43.50. So let's draw it accurately. Mm. That's one. And the next one is this. Yeah, around 33, 36. And the next one is there's one here as well. That's where this is. It's a lower, that's a minor one. In fact, yeah, right here, just at that weekly SR level, 33, 32, 33, 32, just under that. 31, 31.50. Yeah, right here, perfect. That's the one. So, and then there's a one further here. This is why it's taking, this is why price has been ranging for 27 hours, because you can see these levels here. They're very close to each other. It's just creating, just bouncing off these levels. Yeah, 33.24. Yeah, that's it. Okay, I've drawn it as accurate as I can. Now, here's what's happening. For the last 27 hours, we've stayed inside this, right? So this is the overall, that's the bottom of the range, and that's the top of the range. It's about 175, 180 pip range, right? Now, inside that, there are two other minor ranges, right? Inside that. So there is this SR level, and in between that, and then there is this one, right? So price either stays above it, and then when it wicks into it, it goes to the next one. When it wicks into it, it goes to the next one. Then the same thing happens. When it wicks into it, then it goes to the next one. Wicks into it, goes back to the next one. And then the market opened, there was a gap down, but immediately closed above and went all the way to the top, right? And that's exactly what's happening. We came to the top, and now closed we closed at it, so we're coming to the one below, right? Now same thing, if we close at it, we're coming to the one below, right? So this helps you once when you see price ranging for many hours and doing nothing, draw support resistance levels, right? Just exactly the same way I did it right now. It'll take a few minutes, maybe 5-10 minutes, and get quicker once you get used to it. Um, and then you see exactly what happens when price comes here and we start to wick into this or start to close just above the gray box or inside the gray rectangle. Then we're going to come to the next one. We'll probably create a top wick and then come into the next one, right? That's what's going to happen. So let's see. Let's see what price does when it gets to this gray area, right? And just above the gray area is the weekly SR level, and we're bouncing off that right now. If you look at the 30-minute time frame, we're doing nothing. We're created. It's a doji, just is all just garbage, right? Um, yeah, just doing nothing right now. It's absolutely makes no sense to try to take trades in this because these ranges are too small to trade into, for me at least, right? If you're a scalper, great, you can look for sells from here to here. Then if price creates support, you can look from buys from here to here. That's fine. If you're a scalper, this is all great. But for me, I need I look to trade on the 30-minute time frame. It's not not on the lower time frames. On 30-minute is kind of my favorite time frame to trade from. So I need to have profit potential to be able to take a trade. If I get in up here, if price pulls back, comes back here, creates resistance, I'll look to take sells. If we come down, create support, then I'll look to take buys to go up. But right now in this range, it's not enough. If these levels are not here and this was the range, I would have definitely traded. That's 180 pip range, I would have traded. But these other levels in between, the support resistance levels that are in between this range, uh, yeah, those those are keeping me away from the market right now. Let's see what price does. If we close here, let's see if we close. We're going to wait for the 30-minute candle to close. I'm going to do anything right now. I'm just going to wait for the candle to close. We are, this was the previous high. Let's see. Just give me a second. This is the old weekly level. If you've been on the streams long, you would have seen that we took many trades off this level um, previously. I remember taken a few trades off this level. I think not last week, the week before last, I think. I think somewhere here we took sells, then we took, I think, sells somewhere here when price crossed. Yeah, this I remember this level 33.40, and that's exactly where price is now at. So let's see if we're going to stay below this. If you're going to stay below 33.40, 41, that's a very old weekly level. We could look to come further down into this liquidity candle. Is there enough space? 70 pips. Not enough. Not enough for me. Uh, if you create resistance and the next candle breaks the low, I want to pull back to take the trade, not to. Yeah, I'm not. Hmm. This one This one tapped, this one broke. This candle, this is London. This one tapped. What's this low here? 813. This low is 816. This one broke. Yeah, we did tap here, optimal entry, but that was the London session. Yeah, if this happened in the NY session, maybe I would have taken a trade from up here. Then at least there is space. There's 150 pips to move down. But I'm not chasing price here. This 60 pips, 65, 70 pips is not worth it for me. Up here, if we come up here, maybe here, if we come up here. Stop loss above this swing high, tighter stop loss because we've been ranging here too long, so I don't want to hold stop loss obviously above the liquidity candle. The liquidity candle is 180 pips. I'm not going to hold 180 pip, 180 pip, drawdown. My stop loss, this is okay. Yeah, it fits in 40 pips, 50 pips. That's my kind of stop loss that I'm okay with. So if you come up here, maybe I'll look to I'll look to take sells from here to come down. And the reason for that is, let me explain again. If you look at the high time frame, the weekly is bearish, clear. I've explained this. We spent about 10 minutes of the high time frame at the beginning of the session analyzing the high time frame. We spent about 10-12 minutes on it. If you're not here, watch the first 7-8 minutes of the stream. The high time frame is bearish, the weekly is bearish, the daily is bearish, very bearish. The 4-hour is bearish. You can see that we're creating supply, drop, supply, drop, supply zone, drop, supply, drop, pull back to that level, and we're dropping, right? So 4-hour is weekly, daily 4-hour is bearish. 1-hour is ranging. The 1-hour we're ranging. We're not doing anything, right? So just based off the high time frames, the 4-hour, daily, and the weekly, it would make sense if price came up here to take the sells, because this 30-minute candle in the London session tapped the liquidity candle and 3340 and closed below it, right? Those are two important areas, the liquidity candle and 334041. The next candle broke the low, so from this low to that high is the fib. Price came to it though, so I don't know if this is going to come there again. If this happened here, I would have taken the trade. Put my stop loss above that, 45, 48 pips, and taken the trade to come down, anticipating price to head down. We should be heading down. Once we close here, 4 minutes for the candle to close. Once we close, I said this earlier as well, if we close at a level, at a support, then we're coming to the next one, right? But I'm not chasing price. It's very likely that we're heading down. I'm not chasing price. I want that pullback, a tighter stop loss to come down. And if that doesn't happen today, that's okay. If there is decent volume, there should be volume because we've moved only 50% of its ADR today, of the pair's ADR. We've moved only about 240 pips, so price could potentially come down here. Price could potentially come down all the way down here to break this previous low and come down further. Yeah, drop another 110 pips easy. Let's see where we're coming down. We're coming down now. We rejected the Asian high, created 30-minute resistance. Unfortunately, not we're creating it now, not before. If you had created before and there was a pullback, I would have taken these sells, but the pullback happened in the London session, not within my trading hours. We could be coming down all the way here. Yeah, what is this? 3319. 3320, 3319, rough around that area. And if there is more volume, then so that's support there. Yeah, yeah, we're coming down. Unfortunate. No, we're closing below this gray area. Yeah, I would, if this tap happened here in the New York session, I would have taken it. This is London trading hours. But the point is that this candle is significant. We created resistance. Um, we created the London high. We tapped the liquidity candle. We tapped the EMA. We tapped 3340, right? So there are many, many reasons for that candle being important. It's just not a, it's not a random candle, 30-minute candle. We tapped the liquidity candle, tapped the EMA, tapped 334041. That's an old liquidity level. Created resistance, created the London high, and closed below. And the next one broke the low, right? Great. So that's important. So you draw the fib from the low to the high, wait for the pullback. That's the pullback. Entry, you can place pending orders here, and the price is dropping. Okay. 30-minute candle closed at support. We should be continuing down. I hope we get a pullback before we continue down, but maybe not. We think we might just create a top wick and then push down, because that's a lot of bearish volume. 100 pip candle. Yeah, we might. Have you respected this high? 839. Yeah, we have. So we might just continue down. We we respected this high, so we might create a top wick and just push down. Just don't want to. It's not worth it for me. But if you are a scalper and if you take breakouts, you can trade from here to here. But for me, it's not worth it because I got a demand zone here and that's just 50 pips away. That's not worth it. Up here is the trade that I wanted to take that didn't happen. Okay, I'll be back in a few minutes. I'm just waiting for, I'm going to be waiting for this candle now. I'm going to be watching this candle to see if this candle is going to pull back. Unlikely, very unlikely, because this candle has respected the high. And we've closed below this level plus below this level, right? We just closed at it, above, below this and below this gray level. So in the next candle, and this one has already tapped it. And once you break the low, then we're coming down. So that's it. Then the sells are done. Then we could continue further down, or we could react here. But once we come here, there is no more sell opportunity. We'll have to wait and see how candles close for later on. If you have any questions on anything that I have shared today with regards to the analysis, anything that we've done here on supply demand zones, on the high liquidity candle, on high liquidity zones, on support resistant levels, you can always drop a message in the chat. Mhm. If you find these streams useful, helpful, if you find them educational, uh, give it a like, subscribe to the channel, share the channel. It helps to get the word out. All right, I'll be back in a few minutes. Yeah, we're trying to push down. Trying to push down. We've broken the low. We're trying to push down. Let's look at the 15-minute time. Yeah, small body, very weak. Weak bullish volume, right? When we come to these levels, when you see candles like this is weak bullish volume, right? Trying to push up, but no real bullish volume. So this is a sign that price is heading even further down. These two candles are a sign that price is heading down. This candle tapped back into the zone, into the level, into support resistance level, and is trying to break the low to continue down. And where is it coming next? Here. So if you're a scalper and you're looking for small 15, 20 pip gains, then you can take these trades. You can always put your stop loss however however you want to scalp. You can put it above the previous candle high, or look for a swing high on the 5-minute time frame. There isn't. Well, there's a swing, kind of a swing high here. You can put it up here and look to take the trade from there. There we go. We're coming down. Yeah, this is unfortunately this didn't happen here. If it did, then I would have looked to take these sells from up here. But here, no, I'm not going to chase price. Let's see, when price gets down here, let's see what it does. If you're going to get a rejection back up, a pullback, and then continuation down, let's see. This 30-minute candle has closed below this. This one has broke the low. This is an important level. Um, if we get a, we'll see how we draw the fib once this candle closes. We've got about 19 and a half minutes for the candle to close. It's a Monday. I'm not going to be here for too long because it's just a Monday. But we'll see in about 19 minutes. In about 15 minutes, we'll see if there I can give out a setup for today. That's if we break out of this range. If we don't, then we're very likely going to stay in this range for at least another hour or so, hour or 2 hours. So then it's hard to say where price is going to break out to. Only once we get closer to a breakout can we say what might happen in the next hour, how the 30-minute candles might close. But right now, we're still inside this. We're still in this 180 pip range. Yeah, we're still pushing down. We're trying to, price is trying to get to the support level right here. Now, when you draw these, if you draw them correctly, then then you can see how price reacts at these levels, right? You can see how price reacts to them. We tapped this candle, tapped the gray area, this 15-minute candle, and then pushed down. This one tapped inside. Now we're trying to come down here. Yeah, there's got about an hour to close here, so it's a long time we've been here in this range since Friday NY session. This is very likely because we have big news this week. So the market is just waiting for the news to probably come out, probably the day before we might have a breakout. Um, Once we enter the range here. So how many? That's 26 hours. There's 26 candles, 26 hours from here to here. This current candle. This current candle is about to close. Then it will be the 27th hour. Yeah. So here's just yeah, nothing's happening. There's no volume and there's no real breakout. Anyway, I'm going to end the stream in a bit. Here's what could possibly happen. Price could come down, create support, right? Either in this liquidity candle here or below this one, in the next one, right? In one of these two liquidity candles, create support and then start to go back up, right? That could be a possible opportunity, but it's a risky trade because it's a counter trend trade. Remember what we discussed? From the weekly, the daily, and the 4-hour, they're all bearish. So the 30-minute time frame trying to take a counter trend trade from here is not the best idea, right? To take a counter trade from here. So it is better price should react to these liquidity candles. If we go through this, then we will react to this one here, right? So it's better to wait for the pullback, resistance, and take the sell down than trying to take the buy when support is formed to go up. Did that make sense? Right? So price should react to the liquidity candle, to either the first one or the second one here. If not to the first, then to the second. It's better to wait for price to react to it, pull back, create resistance, take the sell to come down and retest the low, than to take the trade going up after support is formed. Okay, I've said it twice now. So that's probably what I'm going to be looking for today, right? Wait for price to come down, react, create support, go up, wait for resistance to form to take the trade to come down. If you come down here, currently we are about 100 pips away from the EMAs. Yeah, if you come down here, 160, I would still have to wait for 30-minute resistance to take the trade to come down. That would be better. That is trading with the high time frame direction. And it would be even better if price breaks this low, and then pulls back, create resistance to come down. If you respect this low, then we are respecting the low, the daily candle low. This is the daily candle low, right? That one right here, that's the daily candle low. Let's look at it here. Let's be clearer. this is the daily candle low, the current daily candle low. If you respect that and start to push back up, then we could be heading, just a second. If you respect the current daily low and form support, if you respect the low and form support here, then we could be pushing up all the way deep into the liquidity candle heading towards 3350, right? Then you can take buys. If you respect the low, form support, you could take the buys to go up. If you break the low, then that's another additional confirmation that if you break the low, then wait for the pullback, wait for resistance to form, take the sells to come down. Okay? We'll come back tomorrow, do a recap, and see which of those two played out. And if I do take a trade today, then I will post it on my socials. My socials, you can find it in the YouTube link or in my YouTube bio. Again, if the information here is helpful, like the stream, share it with a friend, and subscribe to the channel. It'll help. It helps to get the word out. I do these absolutely free. I don't have any paid group or anything. You can join. There is a group. There is an educational group. You'll find the link to that group in the video or in my YouTube bio. It's a Telegram group. You can go there. There are a bunch of traders there. I share information on that. There's a lot of information on supply demand there. You can go find it. This is what it looks like. This is what the group, let me just show you. This is what the group looks like, right? It's a price action entry alerts group. That's the group. In that you will find, if you go to start here, just read up what the group is about. There is a message right here at the top, what you can find in the group. And then if you go to these folders, you'll find relevant information in them. And if you go to this one, you will find a lot of, if you go to files, you'll find files there, media, you'll find a lot of examples on supply demand, a lot of analysis, a lot of stuff, right? Yeah. And if you have any questions, you can always ask in the group. All right, so we've got a couple of minutes more for the candle to close, very likely closing below this. We've already tapped the liquidity candle here. That's where the support level is also. So we moved from, in the NY session, we moved from this resistance level, basically this SR level, to this one. That's all that has happened, right? Still inside this range, still inside the range. I'd like to see price break below this, a breakout of this range, and then the pullback. Then the pullback to take the sells to come down, or if you respect this, 30-minute support, and then we can look to take buys to go up. Right? If you respect this, then we have a, a lower low here, but then we're creating a higher low here, right? If you respect this, because this is a lower low, lower low, lower low, and if you respect this, then we have a higher low, price to go up. Because this one is a high high compared to this and this, we have a lower high here, and then we have a higher high and a higher high, right? Two higher highs, and if you create a higher low, all right, if you create a higher low, then we can push up. Okay. Yeah, 30 seconds, candle is closing below. The next one should continue to push down. I'm not going to be here for the next candle to close. I'm going to end the stream now. Just wait for the candle to close, and I'm going to end the stream. Okay. So I've shared the ideas of what I'm expecting, what I'm looking for, and if that happens, I will take a trade, right? And if I do take a trade, I'll post it on my socials later on tonight. Yeah. So we closed below. 1 hour candle closed below as well. Yeah. I would like to see price respect and start to push up back here. First to this resistance and then further up there. But to come a little more deeper and then do that. Let's see. Yeah. All right. So now this candle closed below this weekly SR level. This one here. You can take a trade here, stop loss there or there, and anticipate price to come deeper. Yeah, that's possible. All right, anyway, let's see. See what happens. If you get a pullback, I might look to take a sell from somewhere here to come down. All right, that's the end of the stream. Be back tomorrow, 7:30 a.m. EST. All right, take care. See you guys tomorrow.